S&P 500 closed below last week's low on Friday, and technical traders will tell you that it's not exactly a good sign. The bullish percent index is somewhat oversold. I will try to explain this market breadth indicator and what it means for the future of stocks. There's still a lot of bears according to the put-call ratio. We'll revisit that. And we will also look at utilities as they have surged, and will market follow? That's a really good question. And we will finish off today with dollar, which is overbought, but I think there's danger lurking for gold underneath all of this. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, September 15th, 2023. As always, please don't forget to help me promote this channel by hitting the like button, sharing this video, making a comment or a question. If you have any comments or questions, I will get to them in the next release. If you are a subscriber, stay tuned. We're going to be covering quite a bit of various securities. For example, crude oil, Bitcoin, natural gas. In this week's video will be covered in the members only video. Various ETFs, including Treasury bonds, emerging markets, some of the large cap stocks like Coca-Cola, American Express, as well as a whole bunch of various speculative stocks. For example, Palantir, Roku, Coupang, and Stratasys, for example, as well as gold miners. So stay tuned. If you are not yet a subscriber, consider signing up by going to MasterChartsTrading.com. You can also find the link in the description. Throughout the presentation, I'll be using my proprietary MasterCharts Trading price action indicators. You can see them on this chart. This is a green, blue, red, and yellow lines. And you can pretty much trade anything under the sun using them. So consider signing up, or if you want to find out more about them, send me a message or make a comment on this video. Looking at S&P 500, not much has really happened this week except for one outstanding event. And for that, let's go to the weekly chart. So on the weekly chart of S&P 500, I'm going to zoom in, just kind of look at it really closely. So a weekly chart means that each week is one candlestick. So notice this week's candlestick is right there, it's red, and this is a previous week's candlestick right there. It's also red. The important thing is that we closed below this previous week's candlestick. You can see that the red bar is lower. Okay, so generally speaking, it's not a good sign. Notice that for the past 1 to 3 weeks we've been closing higher and higher, and this week we kind of broke that trend. Additionally, this candlestick combination, so it's the week of August 28th to the week before last week and last week right here. You can think about those 2 weeks as what's called an inside week. So an inside week is this candlestick from September 5th is entirely within the real body and within the range of the August 28th candlestick. Okay, this was called, so this week from September 5th is called an inside week. All right, and current week that just ended on today, 15th of September, but you can it's actually considered Monday the 11th of September, the week off, Monday the 11th of September, that just ended today on September 15th, 2023, has broken below this pattern of inside week. So as a result, there is now all this technical downside pressure. All right. So the technical downside pressure is, at least the way I look at it, looking at my indicators. So we actually I thought we were gonna make new highs. Okay, so right there where I'm hovering on 28th of August, on Monday 28th of August, we kind of popped above this green line. Next day we had a big run, Tuesday the 29th, and we kind of continued all last week before that, and sort of topped out here on the 1st of September. We made one dip, and then kind of bottomed out on the 7th of September, and then surged again, topped out on the 14th of September, yesterday, the Thursday, and then again are moving lower. So notice that we haven't touched this green line, this green support resistance line, and they are important. This line is important because basically this is the way many of the robots and many of the institutions trade as well. And I've noticed this already on multiple occasions. They matter. These lines do matter. I've seen resistance and support come in on around those areas. So notice that right there on the 7th of September, we tried to touch this green line, but we didn't. So I'm fairly certain we're going to touch this green line, which is at 44.20 in the next few days. I'm probably Monday, I'm guessing. So at the very least, a pullback towards 44.20, which is very close. Okay, 44.20 is quite likely. All right. If we don't hold there, then a trip down towards, the blue line is also quite likely. So we need to be able to hold here, and if we don't, then I think a trip down lower towards like 41.88 is quite likely. So far, the bottom, we did not go that deep. So the deepest we have gone right here, where I'm hovering on the 18th of August, was about 43.39. Towards 41.88 is another, let me see, from today's prices, that's another like 6%. Okay, at that point, it's already, okay, stocks are already somewhat oversold, because this is our all-time, 52-week highs right here on the 27th of July. So undoubtedly, stocks are in an uptrend. Stocks are already somewhat oversold. So green line is like mildly oversold. Blue line is definitely oversold. If we get anything lower, like the red line, that's deeply oversold. If we start touching the yellow line, then we're toying with the bear market. Okay, we're pretty far away from that, obviously. So as of right now, the only two things I'm considering is we bottom out around the green line, which is about 4,400, which is basically there. We're currently at 4,450, so it's like 30 points down, not even a percentage. We kind of bottom out there and rally towards new 52-week highs. The other possibility is we are continue lower towards the blue line, which is around 6% down, towards 41.80 or so, and we bottom out there and rally again towards 52-week highs. I'm not currently considering at all a possibility that we're already turning into a bear market or a downtrend. I don't think so. I think pretty much all the indications are that we're in a new bull market, and most likely new all-time record highs will be made relatively soon. However, before we get there, we need to make 52-week highs, and these are 52-week highs, right there on the 27th of July. From today's prices, they're a mere 4% away. Okay, this is very important to understand that 52-week highs, by definition, are a bull market, and of course, all-time highs as well. So, just from price action and support resistance lines, support resistance levels, this is what I'm seeing on the markets, in the markets. I want to show you a couple of other things that I sometimes look at, and this is what's called a bullish percent index, right there. S&P 500 bullish percent index. on StockCharts.com, the ticker symbol is $BPSPX. Okay, what the heck is a bullish percent index? Bullish percent index is an actual market breadth indicator developed in the 1950s. Now, this is the way it's developed. It's used what's called a point and figure charts. Okay, I don't like them personally. I tried using them. They're a big headache for me to understand and to read. However, and you can read about them. They're a quite interesting way of charting stock prices. Notice it's a completely different way of charting stocks. However, they are interesting in the sense of what they show. And they show this here upper part shows a percent of stocks that are on a buy signal. Okay. And you can find out what is a buy signal according to the bullish percent index, according to the point and figures charts. Okay. So out of the 500 stocks, what is the percent? How many stocks are on a buy signal? And currently we have around 50%, literally, like we're at 50% mark. So 50% of S&P 500 of 250 stocks would be considered on a buy signal using that methodology. Okay, looking at this chart down below here, we have established that S&P 500 has entered. I already showed this. I'll show it again. S&P 500 has entered a new bull market sometime in early February of 2023. Okay. So the new bull market, I marked this, it's around here. So when stocks are in an uptrend, we need to look for oversold conditions. All right. So what is an oversold condition? Well, the way I figured it, at least 50% of stocks within this index would be below on a buy signal. So 50%. Okay. I went a little bit further and I got cute. Those red lines, the horizontal lines, are at Fibonacci, 61.8 and 38.2%. Why those numbers? I don't know. I just figured they're kind of cute. It's really very difficult if you just look at this chart to pick what is considered somewhat oversold, deeply oversold, or very oversold. Yeah, I mean, if you get a reading of 11, as we got here in October of last year, yeah, that's deeply oversold. But 50% during the bull market is actually pretty good. Okay, so for example, you can see here in May of this year, we got down to 50%, about 45% here, and we got a big rally. Okay. Sometimes we don't get that deeply oversold, you see. So I figured that around 50% is pretty good already. And 50% of stocks within the index are on a buy signal. So we're already there. We're already somewhat oversold. Okay, right there. I would consider this to be, a good sign. That means that most likely the rally is very close. We're just having a hard time getting started. Okay, so I'm looking for 52-week highs, like I said, but we just haven't gotten started. So I think it's quite possible that we'll drop a little bit more, and then finally the rally will kick in. If we look at another perspective, so I already showed this chart in the past. This is called Chicago Board of Options Exchange, CBOE, options total put divided by call ratio. Okay, so this is a measure of how many puts or bearish bets. Puts are bought when people think that the stocks will be going down. Calls are bought when people think the stocks are going up. Okay, and we can just say if there is 1,000 puts and 500 calls, then we can divide 1,000 by 500, and we'll get whatever 2, right? Something of that nature, right? So it's quite a bit of more sensitive. You can see that it's not like just 1 or 2, it's 1.075. Okay, so the current ratio of puts to calls is actually quite high. It's 1.09. All right. Now in July of this year, this ratio was 0.83. Okay, and as I already showed, this come on, don't kill it, don't die on me here. This indicator is backwards. So when you think that when we have so many puts, so many people are thinking that the market will collapse and deteriorate and we'll see a new nuclear war in the bear market, people are buying puts, they're betting the market will go down. The opposite happens. When there are too many puts, too many bears in the room, the bulls come in and trample them. And vice versa, if there's too many bulls in the room, the bears come in and they maul them. So quite recently, where I'm hovering, in July of this year, we had too many bulls, too many calls, more calls. And I wrote this, more calls, expect correction. We got this correction. This correction has happened. Okay, now we have the opposite problem. We have too many puts. People are thinking that the market will collapse. In fact, we have so many puts, we hadn't had this many puts since the beginning of this year. Okay, this is the highest level of puts since like early January. Okay, of course, you can see that at late December of last year, 2028, the number of puts was off the charts, and we got a huge rally. Okay, so right now we're approaching those levels. We have a huge amount of a quite large amount of puts, a strong large amount of puts. During previous levels of such magnitude, we had a pretty decent rally afterwards. So this is why I still say there are too many bears currently. Currently there are too many bears, there are more puts, too many bears in the room. Expect a rally. Okay, so we're expecting a rally. It's having a hard time getting started. So like I said, I think a corrective action down towards the green line, possibly a little bit lower, but definitely I would be like super excited if we get to this blue line, which is about 5% away. I'm not sure we'll get there. So according to, like I said, we have already multiple market breadth indicators that are oversold. Bullish percent index, puts to call ratio show me too many bears. People are thinking too bearish thoughts. I think we'll get a rally. Okay, so I think rally is very close. Let's just wait a little bit. All right, what I also wanted to show is utilities before we finish off the stock part of the presentation. So this is XLU, S&P 500 sector, utilities sector. So notice what happened. We had a big rally here on September 5th. We kind of bottomed and then went on a tear. So if we look at the same chart on the weekly, this is a weekly chart, you can see that this week utility really outperformed pretty much anything that was out there. 3.2%. This is a big candlestick. Additionally, there's a giant hammer candlestick that occurred here on the 5th of September. This is a weekly candlestick, so big candlestick here, and that's shown me that two way to interpret it. Okay, I'm going to show that there is more than one way to interpret this. One way to interpret it is utilities are considered safety assets. So people considered that they buying those assets during times of stress. And if utilities are going up in value, doesn't it mean that we're going to get a correction? Okay, another way to consider looking at this is that perhaps utility investors are already sensing that the interest rates are going to come down. Reason being is because utilities are interest rate dependent. They need lower interest rates in order to operate more efficiently. The higher the interest rates, the more expensive it is for them to borrow money. So perhaps treasuries, TLT for example, have already bottomed. This is a very low prices. This is TLT treasury bonds. We're again very close to 52, actually multi-year lows for treasuries. Okay, we're deeply oversold. Okay, if we break these lows from October 2022, we could actually see a significant move lower for bonds again. But I have actually the opposite feeling. I think we might just bottom here and then rally. So perhaps utilities already are showing that people are like, wait, this is just way too low. We won't be buying here at this point. So this is just something to consider. We have more than one way to interpret it. What is the value of utilities? Are they a harbinger of things to come, or is it actually a good thing that we see utilities are going to be leading the market higher because of the interest rates that are expected to come down, and mortgage rates are going to come down, as well as bonds will rally in price because interest rates and bonds move in opposite directions. What do you guys think? Make a comment. I'd love to hear from you. Okay, completely switching gears. We're now done with stocks. We're looking at dollar currency index, DXY. So dollar currency index is important because we trade gold, and I will get to gold in just a second. Looking at this chart, dollar currency index began its downtrend where I'm hovering on January 12th of this year, and we were selling it short, or by extension buying gold. We made a low, a 52-week low right there in July of this year, and after that we just went on a tear. Huge rally. We can look at the weekly chart. It's still going, and last I think several weeks I already saying, wow, this is like 6 weeks in a row we're going up. Wow, 7 weeks in a row we're going up. 8, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row we're going up. Notice what happened this week. We have moved above this red line. So for sure we're now overbought. Okay, if we're in a downtrend, and I still think dollar is in a downtrend, okay, because that's 52-week low right there. If we're in a downtrend and we just made this huge rally, this is a place to consider selling it short. However, we can use my indicators and project the indicators into the future. Okay, so right now I turned on the projection into the future, and notice what's happening with the indicators. So number one, they are getting closer to one another. Okay, so if currently the distance between the yellow and the green line is like 9 points, almost 10 points, then in about a month, in November here, the distance will be 4 points. All right. The other thing is that they're curving downwards towards the price action. Okay, so we are here with the price action, and it will not take a lot of effort for the indicators for the price to close above this blue support resistance line. And as we say, once we close above this blue line, we will consider security to be in an uptrend. If the dollar is in an uptrend, by extension gold should be in a downtrend. Okay, and I will show it to you in a second. Here is gold. Gold is the opposite of dollar because it's traded in dollars. Gold divided by US dollars. If the bottom part of this equation is getting more expensive, okay, gold is moving lower. Okay, so right now the dollar has moved significantly higher. Okay, gold has been coming down. Okay, it came down towards this blue line, and this is really truly an important level for gold to hold, around $1,900. Okay, it's my blue line. It's also the place where we were buying before. Okay, and the support has held here for now. If the dollar does not roll over, the dollar needs to roll over here quickly. Okay, if it rolls over to the downside and begins to continue lower, especially if it makes 52-week low, then gold will definitely skyrocket and possibly break to new records. Okay. The opposite is also possible, and let me show you again projection into the future. Notice what's happening. Notice the way the indicators are. Again, they're doing two things. They're getting closer together. So the distance in early November here is going to be 200 points between the yellow and the green line, and currently that same distance is almost 300 points. So that's number one. Number two, they're kind of curving upwards. So if the price continues lower towards this red line, okay, then we will say that gold is on a downtrend and it should not be bought, possibly shorted if you can do that. So definitely below the red line, bear market, above the blue line, bull market. And the way I've seen this act in the past is when we have this type of curving indicators, a change of trend is quite likely. So this is why I'm saying that there is danger for gold in October-November period. September, maybe we're going to be okay. Especially ideally, we should just kind of bottom here and rally. But if we don't, especially if we kind of trade sideways into early October, then we could be in gold could be in a lot of trouble. Gold bugs could be in a lot of trouble. I like gold. I like personally prefer gold miners to play them, but I am not really. I guess I'm agnostic. I don't really care about gold one way or the other. It's just a trading instrument for me. So if we break below this red line, which is projected to be very, it's going to be moving up. So currently that line in the sand is a 1784. Okay, at that point I will say we're in a bear market. But as early as November 1st, that line in the sand would be at 1855. So that's how many percent? That's almost 4% higher, $68 higher than the bear markets before. And it will get even easier in the future for gold to get into the bear market in November. Okay, so the longer we trade sideways and not move higher, the more likely it is for gold to collapse into a bear market. So this is just something to keep in mind, and I wanted to show this to you guys so that you will understand how to make a decision about gold miners and whether to even buy them or not. Alright, thank you for watching until the end. Head over to MasterChartsTrading.com, click on sign up for one of the products. Again, I have the trading indicators. These are the lines on the chart. I also have the projection of those lines into the future. They are included in the package. So we have the 2.0 and the 6.0 indicators. They are available for TradingView.com. TradingView.com interface is free. All you need to do is sign up on my site and then get a free TradingView.com account. Newsletters are daily alerts about various securities that we trade. So, for example, this week we're going to cover all of these various securities, because each week on Friday I also send out a members-only video that will cover various securities that we traded throughout the week. So, for example, This week we'll cover crude oil, Bitcoin, natural gas, some of the ETFs, as well as large cap stocks, various small cap and speculative investments, speculative stocks, as well as gold related. I think the best deal to get is to get trading indicators and newsletters. So sign up for that. This is a monthly monthly fee, but I think considering adding the yearly fee as well for some people who want to save money. If you don't see it yet, send me a message. I might be able to create a separate link for the yearly fee. And you can contact me by going to help and then contact. You can also send me a message on tradingview.com where I'm hovering. There is a message and I'm at MasterCharts. All right, thank you again for watching. Thank you again for listening. Don't forget to hit the like button, subscribe to this channel, and share this video. And have another great trading week. Bye-bye.